growing flex of sovereign wealth funds from the GCC has seen a broadening in their investment profile over the last decade. Today, sovereign wealth funds from the region represent around 40% of global assets managed by wealth funds around the world. Joining us on the Zawya Podcast today is Diego Lopez, founder and managing director of Global SWF, a data platform that tracks more than 400 sovereign wealth funds. Having worked as a consultant for the World Bank and the United Nations, along with supporting the establishment of a number of sovereign wealth funds around the world, Diego shares his insights on how GCC wealth funds have performed this year and what can we expect on the road ahead. Firstly, thank you, Diego, for taking the time to speak with Zawya today. I think when we last spoke, investments in the first half of 2024 were led by the top sovereign wealth funds in the GCC, which had invested close to $38 billion across 58 different deals. How has Q3 fared in this deal-making process, and what can we expect by the end of 2024?
Absolutely. Thank you very much, Bindo, for having me. It's a pleasure to be here. I think the GCC sovereign wealth funds continue to power through market uncertainty. They have certainly recovered better than other sovereign wealth funds globally, and they keep being very active in global deal making. As you mentioned, GCC sovereign wealth funds, in particular what we call the Oil Five, which are basically the five most active sovereign wealth funds in the GCC, including in Abu Dhabi, ADIA, Mubadala, and ADQ, and then the PIF of Saudi Arabia and the QIA of Qatar. Those are the five most active funds, and I think they've deployed almost $52 billion in the first 9 months of 2023. That is pretty much on track for the previous years. 2023 and 2022 were also very active in global deal making, and I think they are on track to match those numbers. But they are really dominating the investment landscape when it comes to M&A in the GCC and abroad. So very exciting to publish this report, to publish all these figures, because there is a lot of chatter about the funds, and I think there's a lot of interest that will keep coming through in the remainder of the year.
So with the continued growth trajectory in 2024, how exactly does this correlate to growth in assets under management, and what can we expect by the end of this year? I mean, are we talking billions? Are we talking trillions? What are we looking at?
We are talking about trillions, actually. If you look at AUM of sovereign wealth fund industry globally, we're talking about 12.4 trillion US dollars at the moment, managed by almost 200 sovereign wealth funds globally. In the GCC in particular, we estimate that the AUM has grown to 4.8 trillion at the end of September of 2024. We believe that figure will probably reach 5 trillion by the end of the year, given all the windfall that these funds keep receiving from oil revenues, and that it will probably reach 7.3 trillion by 2030. So again, mind-blowing figures, and really dominant when it comes to the global sovereign wealth fund picture. So again, the Middle Eastern funds are not only a good portion of the sovereign wealth funds globally, but also the most active. So if you look at the global scene, most of the activity today is in the Middle East and in the GCC in particular.
We mentioned some of the main oil five here in the GCC, but who are these frontrunners? Is it Saudi Arabia with PIF? Is it Abu Dhabi with ADQ, with ADIA, with Mubadala? Is it the Qatar Investment Authority? Which sovereign fund is really leading the charge, and in succession, how are the others performing?
So in 2023, PIF of Saudi Arabia was the largest spender among sovereign wealth funds globally. And that was very significant because in the prior 5 years, I believe, it was another fund from Singapore, GIC. So it was the first time in 5 or 6 years that a Middle Eastern fund topped the rank, the global rank, in terms of deal making. Now, this year, the picture is a bit different. PIF hasn't been as active, but the Abu Dhabi funds, the three of them actually, Mubadala, first one with 15.2, Adia with 11.5, and ADQ with 9.2. They have spent over 30 billion together, and they are leading the charts when it comes to deal making. Obviously, the investment profile of each of these funds is very different. Some of them, like Adia, normally prefer to go to Western markets, larger tickets, whereas others like PIF, they normally invest more domestically, and they're obviously involved in all the giga projects across the country. So the investment profiles of these funds are very different, but they are still leading the charts globally when it comes to deal making.
What are they actually focusing on in terms of sectors, in terms of region? Are they focusing largely on Europe, or is there a shifting focus on emerging markets or the Asian corridor, especially India and China?
Absolutely. So I think it's important to highlight that there are two approaches when it comes to sovereign wealth management. One is what we call the Saudi approach, which is PIF consolidating all efforts under the same umbrella. So PIF will do both domestic investments and international investments across all asset classes. The other approach is what we call the Abu Dhabi approach. And it's basically an array of different funds with different missions, different investment strategies, different risk appetite, and even different chairmen. So, different sponsors within the Abu Dhabi government. So that means that their focus is very different from fund to fund. So again, Adia doesn't invest domestically or in the GCC for that matter. They mostly invest overseas. Traditionally, over 50% of their portfolio has been in the US, just because it's where more opportunities arise, the markets are bigger. However, they've been trying for years to diversify into the East. And as you mentioned, we have seen an increased activity in both China and India in the past 12 months. I think in China in particular, funds have deployed, GCC funds have deployed 9.5 billion in the past 12 months. And that is incredible. I mean, and that has been across asset classes and industries. But going back to your question about the different funds, so that's Adia. Then Mubadala started as a strategic fund, domestically focused. As you know, it was called Mubadala Development Fund before. But with the years, it sort of diversified the portfolio, and today is a very diversified investor, in which only 20% of it stays in the UAE. The rest is actually overseas. And Mubadala is kind of particular because they have raised a lot of debt and equity. So on the debt side, they have raised they have a very active bond program, and they issue bonds every year. I think this year they have raised $1 billion in bonds so far. And on the equity side, they got Mubadala Capital, which, as you know, is an independent asset manager, and it manages around $18 billion of third-party capital. So from private equities like Ardian or BlackRock. So it's quite interesting to see a sovereign wealth fund actually managing the capital of a private equity. So it's the other way around. So that's Mubadala. And then the third sort of leg is ADQ, which, as you know, is sort of the newest fund in Abu Dhabi. It sort of got its name in 2020, but it started deploying actively in emerging markets. So its focus was normally emerging markets in the region, so like Egypt, Turkey, even within the UAE. Obviously, they have a very significant portfolio in the UAE with TAQA, Etihad, AD Ports, so all major sort of industrial conglomerates in the UAE. But what is interesting is that as of January 1st, we saw a new asset manager in the Emirate, called Lunate. That was basically a joint venture between ADQ and Chimera, part of IHC Group. And Lunate has been quite active this year as well in both public markets and private markets, actually. So again, very interesting to see the array of different funds operating out of Abu Dhabi, which is very different to what we see in the Kingdom with PIF consolidating all efforts, or even in Qatar with QIA consolidating all efforts.
And real quick, what sectors are they focusing on? I mean, we've been seeing a lot of investments in technology, in data. Would you agree? Is that the focus, or, is it, depends on the fund or the market?
That's a great question. So some investors are industry focused, and they will focus on particular, array of services and products within the economy. Others like ADIA, PF, they are all like across industries. But let's say AI, which you mentioned. I mean, we have obviously G42 hitting the headlines these days. G42, as you know, is part of the royal group of Sheikh Tahnoon, but it has also been invested by Mubadala. So they got 2 stakes over the years. And it's also been invested by Silver Lake from the US and Dalio Family Office, so the founder of Bridgewater. So and lately Microsoft. So Microsoft committed 1.5 billion, which has been all over the news. But basically, G42 is spearheading the efforts of the UAE when it comes to artificial intelligence, and they got an array of initiatives within the G42 umbrella that are really unparalleled. That's one side of things, which is AI. But if you look at renewable energy, which we were talking about before, Lunate, which is the asset manager that I mentioned, they got a subsidiary called Alterra, and Alterra committed, I believe it was $30 billion for energy transition at COP28 last December. They have already deployed some of this capital. They recently committed 1 billion to the transition fund of Brookfield, in which they're going to be co-investors with some of the largest funds in Singapore, GCC, as well as in Canada. So again, some funds, and addressing your question, some funds would invest across industries. Some others would invest within their specialization. So very different from fund to fund, basically.
So, Diego, how are these investment patterns changing? Is it just the wealth funds that are taking the lead, or are royal private offices also leveling the playing field?
Yeah, absolutely. And this is an effect that we have seen in the past 2 years. And therefore, we decided to create this new category, which we call royal private offices. And are actually family conglomerates of owned or chaired by members of the royal family or ruling family in each of the GCC territories. In the UAE in particular, they have been very active and very significant. We estimate that there are about 35 royal private offices across the GCC today, and they manage around 0.5 trillion, so $500 billion. But in the UAE in particular, we see a lot of activity coming from the 3 of the Royal Group, which I mentioned before. So Royal Group has several different legs. One is IHC, which, as you know, is the largest stock in the ADX with around 240 billion market cap. We have Alpha Dhabi Holding, which is also very active. We have G42, we have Multiply, we have 2.0, which is actually the owner of Chimera and Lunate and Alterra. So it's a very extensive web of entities and assets that we felt the need of capturing those under a different category, but actually adds to the wealth of the GCC and to the firepower when it comes to deals. both domestically and globally.
What can you tell us about the financial instruments sovereign investors are using to raise capital? Surely the dependency isn't exclusive on the petrodollars. So, how does the capital market ecosystem play a role if it does?
Yeah, it does actually, and if we look at it from the outbound perspective, so sovereign investors in the GCC investing overseas, obviously a lot of their assets and securities are still in the global financial markets. So any movement in the US, especially in the Magnificent Seven, as we call it in the US, the seven largest stocks, it really takes a toll or influences what the AUM and the performance of sovereign investors in the Gulf. But also, if you look at it from the inbound perspective, so I mentioned before that Mubadala was a heavy issuer of bonds, and so are ADQ. So ADQ has already raised $5 billion this year in two different issuances. PIF is a frequent issuer of bonds as well. And some of them are creating these asset managers, which would eventually raise third-party capital as well. So I think we have looked at stock exchanges as part of this exercise, and the reality is that they are still very influenced by domestic investors. So we estimate that about 70% of the local stock markets in the GCC are actually owned by domestic sovereign investors, which is very significant if you compare it to other stock markets around the world. So I think they need to ensure that this is sustainable in the future, and that foreign investors are somehow attracted to GCC markets over time.
So, looking beyond 2024, what sort of growth are we forecasting for the GCC in terms of sovereign wealth fund capital? And also, what do you foresee in terms of, challenges that lay ahead, be it, geopolitical, be it, market economics? What do you actually expect in the short to midterm?
So if we look at all the segments within the asset owners in the GCC, so we've talked about sovereign wealth funds, we've talked about royal private offices, but also there are central banks that have been increasing their foreign reserves significantly in the past 2 years. And also we have public pension funds. So funds like GOSI in Saudi Arabia, or PIFs in Kuwait, or ADPF in Abu Dhabi. So they are becoming also very sizable because of the reforms that the pension industry is going through in the Gulf. So if you take into account these four different segments, we estimate that the industry stands for about 6.8 trillion US dollars today in the GCC. And that would potentially grow into 10.3 trillion US dollars by 2030. So again, more than $10 trillion managed by asset owners from the Gulf region. That is, again, mind-blowing. It's very difficult to understand the size of this, sort of segment of the economy. I think going back to your question on challenges, obviously, market uncertainty is one. I think we've seen, the decrease in rates in the US affecting some markets, and we are expecting further rate cuts in the next 12 months, and therefore that could affect the global financial markets and could affect, hence, the local funds. And also geopolitics, right? So geopolitics, the Middle East is a very vibrant community. I think always affected by geopolitics. The Gulf region and the Gulf countries have managed to stay out of it for a long time. They are friends with the West and the East, but sometimes that balance is difficult and delicate. So I think geopolitics will stay as one of the main challenges for the region on the way forward.
What about new players coming into the market? We've been reading about the Trump-Harris elections, and there's been a lot of conversation about the US mulling about their own sovereign wealth fund. With other players coming to the market, if that turns into a reality, would that change the market dynamics in any way?
Yeah, it's interesting. Both the US and the UK have been mulling about sovereigns for a long time. I think it's just jealousy, if you ask me. But the reality is that they are both deficit economies. They haven't produced a single surplus in 20 years in the case of the US. But sovereign wealth funds are transforming. If you look at a fund like ADQ wasn't formed out of commodities, actually. It was formed out of stakes in national champions. So if you look at it from that point of view, the US could potentially set up some sort of sovereign wealth fund where they could put some of the federal level assets, like the postal services or train services. We have seen that in the UAE, by the way. So UAE Abu Dhabi has their own finances, Dubai has their own finances, and each of the other Emirates. But also there is the EIA, right? So the Emirates Investment Authority that manages some of the federal assets. So we could see some sort of EIA playing in the US. I wouldn't be surprised about that. But I think the most difficult part is, in a democracy, obviously, there is a lot of, checks and balances, and taking a decision like this would take years. So I'm not bullish on seeing a US or a UK sovereign wealth fund in the short term, but who knows? Maybe in the future. Yeah.
We had to ask.
Yeah, absolutely.
Again, thank you, Diego, for taking the time to speak with us, and sharing your great insights on the GCC and sovereign wealth funds. Before, we wrap up, I'd just like to say that, within the region, sovereign wealth funds are continuing to grow. The AUM forecast is expected to reach 7.3 trillion by 2030, and this power flex is a sign of the region's growing position on a global scale. Thank you again, and you are listening to the Zawya Podcast.
Thank you very much, Linda.
Thank
Appreciate
you.
it.